Most traders look at the exact same chart, the exact same price action, the exact same market structure. But still, some of the traders blow up their account, while on the other hand, a lot of traders are making money. So what changes there? What is their edge that you are missing out on? Markets are exactly telling you what they are about to do. Now it's about your understanding. How do you read the charts and how do you trade? So for the last 60 days, I ran a test trading the same setups using both regular charts and footprint charts. And the results, let's just say, it was not what you would have expected. So let's get started with this video. First, let's try to understand why did I even run this test? What was the need for it? I've been trading for almost 8 years now. And one of the most common questions that I have ever came across is, does footprint chart actually help? Does that add an edge to your trading? Does it help you make a lot of money? I would say yes, it does. But what if you don't use it? Does that make any major changes? And by the time you guys finish watching this video, you'll have the exact answer to this question. And I'm sure you'll be able to make a decision that is footprint even made for you or not. I mean, I'm sure a lot of traders think that footprint is just one of those fancy tools which traders like to display on one of their screens while looking at the 10 different screens. And I get the point. If you don't understand something, you try to avoid it. That's what resistance mean, right? So I did collect a lot of data for this past 60 days. One using just usual candlestick setups, while on the other hand, I tried collecting data from the footprint. So delta, imbalances, absorption, volume profile, all of them are covered in this particular video. So the trades, they were basically on the same time frame, same assets, same entry. But what was the difference in the outcome? Let me explain you that. So since I just shared why did I run this test, let me tell you now what did I learn from this experiment. At first, the volume footprint charts, they definitely feel extremely overwhelming. The volume, delta, open interest, everything when you look at them together, they are pretty confusing. And I get it because I have been there. But once you try to understand the logic behind these numbers, you will literally see through the markets. You will see where the buyers are, where the sellers are. Is this even a good buying opportunity? Is this not a good buying opportunity? Everything is super clear, just like an X-ray of the market. So to keep it very simple, the regular charts, they did show me the move. But when I did use volume footprint with it, they showed me that the move was sustainable or not. Was it just another manipulation in the market? Or is it reliable to get into a trade there? Everything was super simple then. For example, a big green candle, which is actually bullish, but a lot of traders would have bought and then the market just reversed. So the volume footprint would have given you a clear idea of that particular candle that, okay, at the top there are a lot of buyers, but the price is still getting lower. This is a clear indication that the sellers are aggressive and this breakout towards the upside was just another manipulation and nothing else. So this was some of the learnings that I came across during this experiment. I'll obviously be sharing some of the trades that I took as well. But yeah, let's start with the results first. So there are 3 major metrics that I need to share with you guys. So the very first parameter was about the win ratio. Now, there was surprisingly no major change in that. But again, CMM itself has an extremely higher win ratio anyways. I was not surprised when I got to see this result, that it was pretty much the same, a bit higher with the volume footprint, but yeah, pretty much the same. Now, if you guys are wondering what CMM is Crypto Market Mastery, a program which is built by me. It has an extremely insane accurate trading strategy. Now I need to share with you guys that nothing is 100% and that goes with CMM as well. But if you want to learn exactly how to trade on the basis of data and not just on the basis of assumptions, CMM is the best program for you guys. The link to that will be in the description. So yeah, we just talked about the win ratio. The next parameter was the average risk to reward. Now, it went insanely higher when I implemented volume footprint in it. Now, I've talked about it in almost every live stream that I do. So if you guys are interested in learning more about all of the things that I'm talking, you guys should definitely subscribe to this channel because I do daily live streams. And just by joining them, you will learn a lot about trading. So yeah, I was talking about the average risk to reward and it went way higher when I implemented footprint charts with it. And the reason behind them was I used to get extremely smaller SLs using footprint charts. So let me show you examples so that you can understand even better. Alright, so here is the very first example. So here you can see I was planning to long Bitcoin at 104.9 level. Obviously, that was a great trade, played out pretty well. But here you can see the risk to reward of this trade was almost 1:2.5. Yeah, great risk to reward, no doubt. But when I used footprint with it, my SL was something like this. And the same trade, the risk to reward is almost 1:5. So you can see the difference. The risk to reward goes pretty high when you are using footprint in the same strategy, in the same level, in the same price action. Now, why does this happen? Because when you are only using price action, your logic tells you that you need to cover the previous low, which in this case is at 102.2. So this is what your logical SL looks like. You're trying to cover the previous low. Makes sense. Obviously, no issues with that. But with footprint, it went as low as this. Now, why did this happen? Because when I turn on the volume footprint, it tells me that a lot of sellers are already trapped at the bottom. So now I don't have to wait for the price to go lower because the market already has enough fuel right at this bottom for it to reverse and make a new high. So that way, volume footprint makes it very convenient to enter the same trade that you would have entered using the same price action based trades. But here your SLs are pretty small. So that's the very first reason why your risk to rewards using volume footprint is insanely high. Now this was example number 1. Let me take you to example number 2. And in that example, I'll try to explain it to you, showing you the datas as well. Now this here is example number 2. I tried to short Bitcoin at 113.7k. Again, trade played out pretty well, no doubt about that. And this trade was shared on the live stream itself. So if you guys are joining the live stream, you can also catch such kind of trades with me on the live stream itself. Yeah. So if you guys see here, it's a great trade. Risk to reward almost 1:3. No doubt, great risk to reward. Yeah. That's again, it's because of the kind of strategy that I follow. Even with price action, I'm able to capture 1:2, 1:3 very easily. And that's not something which is very insane, to be honest. 1:3 is pretty common. But here, if you guys see, when I entered this trade, my risk to reward was pretty sweet. It was almost 1:12. Now, how did I even do that? So let me show it to you. When I turned on the volume footprint chart, this is what the market looked like. Yeah, let me hide everything. So this is the top of the market, exactly where I went short. I could have easily spotted a buying imbalance right at the top. So no need for me to wait for the price to take out the previous highs or the previous low, because here I can easily spot that the market has trapped enough buyers right at the top. I do not need to cover previous highs, which basically in price action we have to do. We have to cover the previous highs and the lows as our SL. But when you turn on the volume footprint chart, this is basically where your SL is. So the same SL, which was almost of, let's say, 1.5 or 2%, is now less than 0.4 or 0.5%, probably even lesser than that. So yeah, when you are using volume footprint, if you have a strategy that is based upon price action, your accuracy remains pretty much the same, but your risk to reward will go insanely higher. I have captured trades which are almost as high as 1:20, 1:30 as well. Obviously, that's not something which is very common, but with volume footprint, that is definitely a possibility. Now, if you guys are wondering how to learn more about footprint, how do you trade using them, I have created a dedicated program around this footprint charts, in which I have not just covered about volume footprints, but all the advanced tools that I use. I have explained them all. So you guys can definitely check out if you want to learn more about the footprint charts as well. The link to that will be in the description. So yeah, this was example number 2, and I tried to show it to you guys using the same data as well, which I was looking in the market, and how I got to capture such interesting trade with such smaller SLs and great targets. Let's move to another example now. Alright, so here is the example number 3. You can see I tried to short Bitcoin at 122.068. Another great trade, played out pretty well. Here, what you can see, the risk to reward of this trade is almost 1:2.5. Great risk to reward, no doubt about that. But when I used volume footprint with this, my SL was exactly here. Now let me tell you everything that went with this trade. What was I looking at? How did the volume footprint help me get such a smaller SL? So let me quickly turn on the volume footprint chart for you here. Yeah. So if you look here at my entry, what I was able to see that we had a crazy selling imbalance as well. So imbalances are pretty strong levels. You need to always consider them. Now there are imbalances like fair value gaps and all those kind of bullshit things. Again, if it works for you, it's great, but I think they are just another BS in the market which only creates extra noise for you and does nothing productive. So here what I was able to spot, as I said, was definitely some selling imbalance, and it was a pretty strong selling imbalance. And then when I just zoomed in more, I was easily able to spot that a lot of buyers are trapped right at the top. And if there are so many buyers, why is the price still able to go lower? So that means that the buyers are trapped at the top. How to spot if traders are actually trapped or not? And here, since I said the main logic of this trade was trap traders, if the price goes higher than that, the whole logic goes to wane. And for that reason, I was able to keep my SL so small because the logic itself was about traders that were trapped. So price going in their favor makes them untrapped, and for that reason, your trade gets invalidated as well. So yeah, this is one of the reasons why I am able to have such smaller SLs and still able to capture bigger moves, because I'm not trying to have smaller SLs, but my strategy itself is making them smaller for me. Another one of the ways how footprint helps in trading was not just about entering into trades with very smaller SL. That was just one of the aspects. And yeah, that definitely made your risk to rewards higher. But the second pointer, how footprint actually helped me in a lot of other ways as well. It was about how it helped me exit out of the trades earlier. Technically, it's not the right thing. Once you have entered into a trade, you should obviously exit at the targets that were planned. But what if you know that the reversal is highly possible even before your target? With price action, there's not a lot of ways how you can understand that. But volume footprint, it makes it super easy, super clean for you to understand that. And one of the examples is right in front of us. So I entered into this long trade at 107. I was targeting 114k for this trade. And as you can see, it reversed earlier than my target. But I was also able to exit out of this trade. And how did I even do that? Let me explain that here. So if I quickly zoom in on the top where the market reversed from, you can see that there were a lot of buyers around that area, almost 8 million buyers, and the price again started to go lower. So we just hit one of the most important bullish level, that was the buying imbalance. And even if there are aggressive buyers and the price has started to go lower, that is not a good indication. That is something which clearly tells you that even though that there are more buyers, the price is not able to sustain at the top and it is going to reverse. I exited almost at somewhere around 111.3 and I was able to make good profits without getting stopped out on this trade and without giving back the profits that I made. So this is something which is very common with the price action traders. And again, I'm a price action trader as well. I'm not saying that's the bad thing. But the most common part is we enter into a trade, we set our targets and we expect that the price won't reverse before our target. According to me, that's definitely a right approach, that you enter, you set your alerts, target set, stop loss set, and you can probably leave your charts as well. But there might be cases where the price will move almost 50, 60, 70% in your favor and then reverse. So you will almost give back the profit that you were about to make on that trade. Either it gets stopped out at break even or your stop loss gets hit and you'll just give back all the profit that you made during that day or during that week. So footprint again here had an edge. It can show you that the market has a higher probability or a higher potential to reverse from a particular level. And because of that reason, I was still able to make profit in those trades which reversed right before my targets. So to sum it up, my win rate barely changed, but my average risk to reward went up way higher. And third, I was able to cut unnecessary trades before even it reversed from. So yeah, the verdict is something like this. Footprints didn't make me more accurate because CMM was already doing that, but they made me more selective. They were able to guide me where the chances of reversals were higher, where the continuation is a possibility, where the buyers are getting weak, where the sellers are getting trapped. All of those things I was easily able to understand just by looking at the footprint data. So that was about the data and the results. But let's say this is your day one of volume footprint. I'm not going to leave you hanging. I'll tell you what you're exactly supposed to do. So yeah, if you're a beginner, don't rush to footprint charts. First try to read the context. First try to understand what these numbers are. What is delta? What is volume? What is everything? What is negative delta? What is positive delta? First understand all of this. Do not just try to trade on the basis of what you learned from this video, because again, I've learned this from my years of experience. It is not just something that, okay, I went through a YouTube video and now I know how volume footprint works and I'll start trading on the basis of that. No, I use different footprint softwares as well. I did not just stick to TradingView, even though TradingView, according to me, is more than enough for you to get started. But yeah, there are different softwares which make it even easier. So once you've mastered the price action and the market structure and everything, then try to learn more about the volume footprint and eventually try to use it in your trading as well. So if it's your day one, if you're someone who is an extremely beginner, you need to learn, you need to understand what footprint tells you and then try to use it in your trading. Do not just blindly get it. Do not just blindly look at the numbers and try to buy and sell, because I can tell you, footprint softwares are one of the best edge that you can have in your trading. But if you don't understand them, you will be losing a lot of money. Since they show you trapped buyers, hidden absorption, and real-time aggression, you will stop guessing and you will start understanding the market and actually how it works. So yeah, after 60 days of making these records and observations, here is what I have to tell you. Footprint charts won't make you better trader overnight, but they'll make you see the markets like a professional do. You're actually trading with the market makers. You are actually entering and exiting with them. So why would you not want to do that, right? But yeah, as I said, you'll have to learn it first and then use it. And once you learn how to combine the market structure and order flow together, you will become an unstoppable trader. You will become the best version of yourself, and I can literally guarantee it to you. If you understand the context of both of these important factors of trading, you are going to be the best trader out there. So if you guys have any more questions about the footprint or price action or anything else, just drop them in the comments and I'll make sure to answer your question right there or in the live stream that we do daily. So subscribe to this channel, like the video, and I'll see you guys in the next one. Bye.